Hello, everybody. Welcome back to my channel. My name is Tim Mangus, here at Realty. Now, today I've got a video for the week for you. We're going to be diving to the nitty-gritty of calculating returns on income for rural townhomes in Calgary, all under the price of $400,000. Now, whether you're a first-time home buyer, an investor, or looking to make a savvy move into the real estate market, this video is for you. Let me break it down step by step so it's crystal clear for you. We'll be looking at key factors like purchase price, potential rental income, expenses to give you a realistic snapshot of what your return on investment could look like. Now, here's the best part. By the end of this video, you'll have the tools to make informed decisions on your next property venture. If you want me to access a property, comment below. Remember, this is for educational purposes only. All right, now we know we're going to purchase a property for under $400,000, but let's see what kind of income we can get. I go on Rent Faster. Comment below if you want me to send you a link to Rent Faster. In it, there is a page that tells you what the rent is going for. Here we are now. I want a townhouse, so I'll click on here. Yeah, I want 2-bedroom, 2-bathroom. I find that to be typically the highest demand. Okay, we want it unfurnished, and it's going to be in Cranston. Average for that property now is $2,200. There's only one listing. The demand is so high. I'm going to review the stats quickly for you because it's important for you to know what happened in the past could probably happen in the future as well. All right, now you can take one listing you can't really go too much by. Let's take a look at the historical listings, what we've got here. Very low. Cranston's a community, South Calgary. It's got to be over 7,000 people. It's one of the biggest communities in Calgary. So there should be a lot more properties than this, but there's just not. And it's just decreasing. Just even in August, there was 13 listings. Now it's down to 1. That shows you the demand far exceeds the supply. Let's take a look at the price. Most importantly, let's take a look over 5 years because that's how long you'll be holding your property for. Okay? It was $1,000 5 years ago. That property is now doubled, $2,250. It's not going to double again, but it sort of tells you that's where it's going. Okay. Now to rent it out, again, let's take a look at 5 years. Okay. 5 years ago, it would take you 67 days to rent it out. Now it takes you average there 32 days. You see above there, so it's cut in half. So the demand here is far exceeds the supply. So the rental market is good. We know the major thing is we know the income here. That's the average. All right, now we know the income. Let's go try to find properties. What you're looking at here is the Calgary MLS that's only accessible to realtors. Comment below if you want me to send you any properties or set you up an email notification for properties that you're interested in. Now, this is strictly a search criteria. I want to take a look at the sold prices so we'll get a realistic value of what actually I need to spend to purchase an investment property. All right, now I'm going to put sold here. It's going to be under $400,000, 2 bedrooms, 2 baths, and basically it's in Cranston. We're going to choose Cranston. There's 3 available here. So let's take a quick look at them. We do a search here, and there's our 3. I'm going to just go into single view here. It shows me all 3. Now, typically you can see the sizes all the same here. Everything looks pretty well the same. They're all built in the same year even. One has a fireplace, which I really don't like for investment properties, but it's probably electric fireplace. And you can see the days on market here. It all sells very fast, all within the last few months. Okay, let's take a look at the most inexpensive one here. $315 sold right away, 18 days. Okay, take a quick look at it. Just want to see just a quick view of it here. Looks clean. It's got barbecue space. That's the main thing. It's just clean. The appliances look good. Flooring looks good. Good. All right, let's choose this one as our example here. So the price is $315,000. And we see that the taxes are $1,757. We need to do this to calculate the cap rate and what kind of return we're getting on the property here. Okay. And most importantly, the condo fees, $348. We'll put it at $349 there. one thing I do like to look at, what does condo fees include? Common area maintenance, insurance, meaning the people don't have to do anything outside. So that's a bit of a value for people, and maybe they'll put a couple $100 extra onto it, okay? They maintain the grounds, reserve fund, so everything's taken care of outside of your property, and that's a good value for people there. All right, now we've got there. Now we're going to go to net calculator, determine the net operating income, the cap rate, determine if it's worth looking at the property. Okay, next, rental property calculator. This is on calculator.net. Comment below if you want me to help you out with anything here, if you have any more questions regarding it. Now we know we want a property at $315,000. That's what we looked at. So we'll enter that in here. If we can enter it properly, 3150. Is there one more zero? One more zero. Done. Down payment 20% usually for a rental property. Interest rate, we'll put it at 6%. Amortization is standard, 25 years. You can do less if you want, but 25 years is pretty good. Closing costs, usually lawyer costs, any incidentals, that's usually around $1,500. Typically, these properties don't need repairs, so we'll say no. Now, we know from previously the property tax was $1,757, and really, it's not going to increase by much, hopefully. So let's put it at 2%. Okay, total insurance. What I did was I go to a website called lowrates.ca. It just gives you a rough quote. And this is what it's saying here. If it's a condo, 2-bedroom, 2-bathroom at this prices here. Then I'll go back, enter that number in there. HO fees here. So if we go back, basically that's homeowner association fees. And that's for the property of Cranston, because they do have some nice community courts, tennis courts, not a swimming pool, but arena, and they've got a nice like a gym you can rent out and things like that. So that, if we take a look at, it'll be right here, homeowner association, right here, $164. Okay, and we will enter that in. $164. 164, and we'll put that at 2% here. We'll put everything at 2% because that's the inflation right there. Maintenance is not there, but let's put the condo fees in. The condo fees at $349, and we can even put that at 1% increase. Other costs, let's just put $500 down. Just do a present maybe for the tenants or anything incidental, nothing too much there. Okay, and we'll put that on 1% there. So there's our expenses there. Now, income, we know the average is $2,200. Okay, and we know it's growing at 3% at least there. There's no other monthly income. Vacancy rate, I'm putting at 0. If the reason why I'm doing that, take a look at my video where I have 0 vacancy for 10 years. If you follow that, you should have 0 vacancy. Management fee, none. You're just going to run it yourself. Now, this is appreciating roughly 2%. We're going to hold it for 5 years. You can change any of these numbers here to calculate, okay? Now we've entered all the information. We want to see what's the return on our money. So let's we got everything here. Let's calculate. There it is. This is all our numbers that we want to take a look at here. Major thing here is how much money am I going to get profit after 5 years of renting this place. Here's the magic number, $65,000 on your return of putting 20% down on a property that you hold out. Basically, you're going to double your money. You're going to put down $60,000 to buy that property, roughly, and you're going to get, on top of that, another $65,000. Your cap rate is excellent, 6.97. Anything between 5 and 8 is really good, okay? Now, if you take a look at the rental income here over 5 years, now net operating income, it does not include the mortgage. So some people say, you pay off mortgages as quick as you can because that's your future net income here. Let's take a quick snapshot of the first year. Basically tells you everything here. This is amazing. Your positive cash flow from day one. That is really good here, okay? So you're making money away from day one right away. Okay, now over 5 years, let's see what's happening. Okay, the rents are still going to go up here. Okay, it's going to go from 26, 29 over 5 years. Your mortgage payments stay the same, but the good part is your interest rate, the portion towards your principal pay down will increase. Okay, expenses pretty well stay the same, so that's a big difference here. You see the income versus expenses. There's not much expenses there versus the income here, and your cash flow is nice, very healthy here. Your return is 100%. Okay, so this is definitely a good property, rental investment property. Now, in conclusion, remember, this is for educational purposes only. You have to do your own due diligence, go through everything I just showed you, go through the calculator. Also talk to a mortgage broker, make sure you can get the financing, hire a property inspector, do everything on your own as well. Remember, this is for educational purposes only. Okay, now, one thing is, the question is now, are you maximizing the $60,000 you're putting towards this place? You should go through 30 or 40 of these scenarios on different properties and determine, yes, this is the best I can get for right now for $60,000. In 5 years, I'll be doubling this money. Maybe you can get more. You don't know yet. That's why you have to go through so many different types of properties and determine, yes, this is the best property I can get, so I will basically purchase it. The key thing here is to really think slow, really go through everything there. And once you see a property, you act fast, you buy it right away. In conclusion, comment below if you have any questions, if you want me to help you basically determine a property you're thinking of buying, and you just need to help to check if it's ROI to see if it's worth to buy it or not. Thank you very much.